Same.
Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
That's right, live on a Saturday. Great to have you with us. Florida Talk Real Estate. 2 hours of infotainment is what we assure you every Saturday. And I like to think we've delivered for the most part over just about every Saturday for over a decade now. Welcome to the longest running real estate radio show in South Florida. Thank you for being with us, whether you're on 92.1 or 101.7. South Florida, thank you. You are worldwide connected with us. Free download of your iHeartRadio app. Look for us on Real Radio 92.1. Boom. Doesn't matter where you're at. You're listening to Florida Talk Real Estate on a Saturday. And, of course, we offer you a live stream opportunity where you can view. I know that sounds weird on the radio, but we got some camera action working. Facebook live streaming Florida Talk Real Estate on Facebook. You can also find us on Florida Talk Real Estate's YouTube page, Florida Talk Real Estate LLC. You'll find that on YouTube, live streaming as well on a Saturday, and you got a ton of chunk videos there. Great informational videos for you to consume. Just remember Florida Talk Real Estate, all your sources, also with .com, your one-stop real estate shop. Thanks for being with us, and you can be a part of the show toll-free at 877-927-6969. Questions, comments, concerns in the world of real estate? Bring it on. The team that we got assembled on a Saturday can handle all that and more. I'm your boy, Johnny C., your air traffic control. Our producer extraordinaire is Jimothy. You make the call, we'll take the call. He'll line you up. And, of course, good morning to Mike Rauch, the mortgage guy from the mortgage firm. Hello, Michael.
Good morning, Johnny C. Holy cow, what a beautiful run of days we've had here in South Florida. Just love it. Love this time of year. I know I feel like I say that every time this time of year comes around, but I'll keep saying it, Johnny. I can't get enough.
Everybody that works outside, I think, is nodding their head and very much appreciating the last. So I know the last week's been really dramatically different, but for the last probably like 2 or 3 weeks, we've had a nice run where just the humidity wasn't ridiculous. I'm sure it's going to be back before we know it, but yeah, it's been real nice. Hopefully those working outside have enjoyed the little bit of break.
Yeah, so good morning to you. Good morning, South Florida.
Good morning. And good morning to Jimmy D. That's Jim DePola. Told you for over a decade he runs a top producing Keller Williams team at Keller Williams Innovations. You'll find the Florida Home Pros, and you'll find Jim DePola. Jimmy D, how you be?
Happy South Florida, everybody. It is a gorgeous day. I was going to say the same thing, Mike. You stole my thunder, no pun intended. I was going to be talking about the weather and what a beautiful weather it was. Driving down here, it was 65 degrees when I was driving down, and I was thinking, wow, just about 4 weeks ago, we were probably at 86 degrees. It felt like, if I'm not mistaken, we had those days. And it's just so nice right now. It's just so beautiful. And the skies are just gorgeous right now. Watching the sunrise and the clouds is just amazing. So hope it stays that way the whole day. And we had a lot of rain up by where I was, up in the north part of the county 2 days ago. And, of course, we got flooded out like we always do. So we got a lot to talk about today. We got a couple open houses, so we got some agents calling in to talk about that. We're going to be talking about the mortgage rates and the future of that. We're going to talk a little bit about mortgage affordability, and we're also going to talk about first-time home buyers and understanding that. And we're going to offer some free books out there for people that call in. We are also going to be talking about, in this changing market, we were going to talk about this last week. The subject's going to be my carpet is disgusting, but I want to sell my home. What should I do? And we're going to talk about that in this changing market. We're also going to talk about the safest city in South Florida. And I don't think Johnny's going to agree with this at all when we talk about it.
Oh, really?
Wait a second. The safest city in South Florida?
Yeah,
in
safest city in South Florida, yeah.
Well, how many cities are there? How many cities qualify?
Oh, my gosh. Do you know how many cities there are just in Palm Beach County alone? Here, okay, let's talk about that. How many cities in Palm Beach County alone? Go ahead, guys.
Just one, West Palm Beach.
Oh, Palm Beach County, sorry. How many cities in Palm Beach County?
No, that's what I, yeah. Like, what qualifies as a city? Maybe that's where I need a definition of a city.
You don't think Delray Beach is a city and Boynton Beach is a city?
I don't know.
How many cities are there in Palm Beach County? What do you think, Johnny?
23.
23. What are you
I like
laughing
that.
about, Mike? Why
I
you
mean,
think
it's just 23. He just pulled it out. I bet
I
you it's
know
very
he
close.
just did, but do you think 23 is like too high or too low?
I guess I'm thinking big city. So let me. Are you calling like Wellington a city?
Anything.
I want to
Well,
go higher.
yes,
I want to go higher. I want
yes,
to go
that would
higher
be
because
a
I
city.
didn't go west enough. I got like Glades and
Yeah, you do.
Give me 33. 33.
33.
33.
33.
All right, I say 31.
I don't know the answer to this.
What?
But
Oh,
I do know this. This is why I don't know the answer. When I was a reporter back about 20 years ago, it was 47, right? So now we got a couple new cities though. We got Westlake, right? I don't even know the other cities, but we have a couple new ones. So we have Westlake, and I know we have one or two others. So there's probably like 48. Wait, no, 47, 51. What are you seeing, Johnny?
Google says 39.
39? No way.
Yeah, they're calling cities and towns.
Maybe it was 37 then instead of 47. So anyway, whoever said 33, which was Johnny, he was right, even more than the guy who brought up the subject. So Johnny came in first on that. That's a lot of cities, right?
I
So
see it.
if-
Timothy
if
is
you
right.
talk
It's
about
39 municipalities.
yes.
Members of the Palm Beach County League of Cities.
So then you have that's just one county. Then you got Broward, right? Then you got Dade. Then you've got Martin and St. Lucie, right?
Okay.
So then if you add all those, I'm going to tell you what the safest city is today. And like I said, Johnny is not going to agree with that at all.
I definitely have that. One came right to mind when you say that. But
and last but not least, by any moment, if you have any idea that you're thinking about buying a house or selling a house in the future, the monthly market reports came out. They're kind of interesting. So we're going to talk about that. The September reports came out. That puts us at 3/4 of the year. So, the September report is the last of that quarter. So it'll be interesting to see what the numbers show. There's two numbers I think that are really key that we're going to look at when we get there. But before we do all that, let's go ahead and get into the open houses because we've got Angelica and Karen holding on the phone right now. And let's see, we're going to start off with Angelica first, and we're going to talk about the open houses.
Perfect. Angelica is patiently waiting and joining us on a Saturday, Florida Talk Real Estate. Angelica's got details on an open house. Welcome, Angelica. You're on Florida Talk Real Estate. How are you?
Hi, good morning.
Good morning, Angelica. How are you doing today?
I'm really good. How are you?
We're doing great. We're doing great. Thank you for working on this open house this week. Which property are you doing?
I'm doing the 1526 Running Oak Lane, Royal Palm Beach. It's the 5.5, and it's really gorgeous.
Yes, and that's in Pinehurst of Madison Green, which is awesome area of Royal Palm Beach, and it's also in a gated community. And one of the things I like about Running Oak is the layout of that house.
Yes, it does have a great layout.
It
has
had
a huge
yeah. I'm
living
sorry, go
room and dining room.
Yes, it does. It has what I really like about it. Not only does it have a large living room, but it has it also has a very large family room, and the family room is right off of the kitchen, so it has that great area open feel with the vaulted ceilings. And the backyard is huge, and it has a brand new vinyl fenced in backyard. And this school, this particular property, is in one of the best school districts in the county. It's got Royal Palm Elementary, which is an A-rated school. And Karen, did you know that you could actually kind of sneak through the backyard of this property and be able to walk to the elementary school? Did you know that? Did we lose you? I think we lost her.
Angelica? Yeah, we might have.
I think we lost her.
Yeah.
So so that's that property. You could actually, it's that close to the elementary school, so it's really great for that. But even better, if you buy this house, you don't have to worry about moving for school systems as your kids get older, because the middle school and the high school for this area are B-rated schools. So you got a great school system right in the neighborhood. The other thing that's really great about it is that the kitchen is nice and open and it has a lot of light. This house is very light and airy. And in this neighborhood where we are also I think we're the only 5-bedroom house available in this neighborhood. And we're also in the middle of the price range. So we're not like at the upper limit. These sellers are priced reasonably for the house and the size it is, and recognizing like the carpeting probably needs to be replaced at, sooner than later. And there's some updating, but everything is rock solid as far as the structure of the house, and it's move-in ready. It's just, change it according to your preferences. So that's a great house. Angelica's going to be there from 11 a.m. to 2 p.m. today, Saturday. And it is gated community. So when you get up to the gate, there's going to be a little sign there, and it's going to have Angelica's phone number, and then she'll get you through the gate so that you can get into the gate. Please check out that house. It's an awesome deal. And we hope we see you there.
Yeah, and if you were checking us out on Facebook, you saw some really nice pictures of that home. Of course, if you weren't looking on Facebook, maybe you're on the car, or you're on the app, you can always go back and check that out. There's some really nice videos of that property that Angelica's got the open house today. And as Jim noted, a huge backyard on that home.
Yes.
Fantastic.
And yeah. Okay. Now let's go ahead and switch over to Karen. Sorry, I'm having a problem with my computer screens here. Let's go ahead and switch over to Karen.
Karen,
and,
I'm
Go
here.
ahead.
sorry.
I'm here. Hopefully, I won't get lost. I'm here.
Hi, Karen. You're on Florida Talk Real Estate.
Okay. Well, first,
How's everyone this morning?
okay. I'm sorry, Karen. Let me just introduce. This is Karen Robinson from Keller Williams, and she's going to be doing our open house today over at 3261 Southwest Solitaire Palm Drive in Palm City. We had Cam out there last week.
Yeah.
Karen, so you have fresh eyes on that property. What did you think of Solitaire?
Well, for Solitaire, I love the house personally. I love the community. It's a great family community. For commuting, it is awesome. You're close to the 95, close to the turnpike, and there's some great updates in the home. I mean, you're going to put your special touch on it, but I'm telling you, I went in there the first time. There were families outside, and it was raining, but they were still having a good time. The home is like on a little cul-de-sac. It's a dead-end street right there, so it's great if you're raising a family. I think the house is awesome. It's a 3-bedroom, 2.5-bath house with a pool. The pool is awesome. The backyard is great. But those things were the things that appealed to me in the home.
Yeah. You hit on a lot of points, and on top of that are some of the major costly upgrades that they've done to that house. They put on a new roof 2 years ago, so the roof is basically brand new. They just resurfaced the pool and the pool deck. I think the AC is only 4 or 5 years old, and it's running in great condition. And this is one of the also one of the lowest priced pool homes in Martin County right now. It also, the other thing I really like about this, Karen, is the commute. If you're a commuter, if you need to get up north to Vero Beach, or you're trying to get down to Palm Beach County, which is very common, we're going to be talking about that in the market report this week. This is a great home because you're not so close to the turnpike in 95 where you hear the zoom of the traffic, but you're less than a 5-minute drive to get to the turnpike or 95, which is a really, really nice situation. I always call this area the honey hole for people that need a commute and they're looking for affordability.
Yeah, absolutely. And one of the great things for those people that, we just had that hurricane, well, we have shutters, the accordion shutters, and those were put in 2008. So they're pretty good. So the 9 is rescreened in, this year. So there's some awesome things about this home that I think everyone should just come out and take a look at it and, see how they fit into the neighborhood. I personally think it's a great fit for families.
Yes, and the school systems, and Palm City has the best school system in the state, or if it isn't ranked number one right now, it's been in the top 5 for like ever. And this particular house is in 3 A-rated schools, and the farthest one is 1.9 mile. No, that isn't true. The farthest one is 8 miles away, and that's the high school. But the elementary school is a half mile away, and the elementary school is a mile and a half from this house, and the middle school is only a half mile away from Solitaire. So that's another really good benefit. Now, this also is a gated community, Karen. So how are people going to get into the open house, and what time are you going to be there?
There's going to be a sign on the open house sign that's going to be at the front with my number on it. Excuse me, so that they can call me and I'll give them the gate code.
That's awesome,
That's
Karen.
written
Can
on
you?
the sign, right by the gate.
And it's going to be right by the gate. Okay, great. Now, Karen, do me a
Yeah.
favor, will you?
Yeah.
Sell that house. Okay.
That's what I'm hoping to do.
Yep.
That's what I'm hoping to do.
Yep. So everybody go out and see Karen today, Angelica today. They're both having their open houses from 11 o'clock to 2 o'clock. If you want to find out more about the open houses, the best place to go right now would be to our Facebook page, Florida Talk Real Estate, and you'll have all the information for the open houses.
Awesome. Karen, good luck out there today. Thank you very much for joining us.
Thank you so much. Have a great day.
Yeah, you too. Remember, details on both those open houses. That's Florida Talk Real Estate on Facebook. Florida Talk Real Estate on Facebook. And remember, Florida Talk Real Estate is also a .com. It's your one-stop real estate shop. That is your access to the entire team. These are pros, experts in their field, and you get them all at FloridaTalkRealEstate.com.
So let's get into the safest city to round out this half hour. We're going to get into the safest city in South Florida. I'm going to tell you where this article is coming from. Channel 12 reported on it, but it wasn't their information. It was, sorry. Oh, I'm losing it. Haha.
Like Wallet
Hold on
Hub.
here a second.
Well, hopefully you remember the city at least.
I remember the city. I'm just
Okay.
trying. I don't remember who did the study.
Oh, it's probably like Wallet Hub or somebody like that.
Yeah, that's who it was.
It was.
Wallet
Yeah.
Hub?
They
It was,
do it all.
Scotty.
They always do. That's it.
It
That's
was.
what that is 20 years of radio experience for you. Right there.
I know, that's so true. It is. It's total, right? So, and these things are just talking points. This isn't like I wouldn't be basing my decisions on real estate, location on all this stuff, but it's still fun to talk about.
But it has to be based on something, right? Crime statistics or
Well,
something
we're
like
gonna,
that?
yeah, we'll get in. That's what we're gonna get into right now. So they're naming what
Wait.
what county do you think the safest city is in? Let's start off with that. We'll narrow it down.
In South Florida?
In South Florida, what county?
How far up does that go? Does that cover all our counties, including?
All the way through the Treasure Coast, let's say.
Okay. So my gut tells me the further north. So let's say either Indian River or Indian River. We don't go up to Brevard, right? So Indian River.
Indian River. Okay. How about you, Johnny? Mr. Wallet Hub.
The way you let us,
Yeah.
you're like, how
Johnny's
many
like, Dave.
cities are in Palm Beach County? I'm gonna say it's in Palm Beach County.
Palm Beach County. Okay. It is in, this is going to be so easy now. It's in St. Lucie County.
Okay.
that narrows it down pretty good.
Right. Which city could it be?
Oh, it's Port Fierce for sure.
It was St. Lucie. And what
Port
they're
St.
saying-
Lucie.
Port St. Lucie. That's correct. Port St. Lucie. What they're saying is out of the 180 safest cities based on 40 indicators, which we'll talk about in a second, we ranked Port St. Lucie ranked 101 out of 180 of the safest cities in the country. So that
Okay.
puts them in rarefied territory. If you think that there's only 39 cities in Palm Beach County, and you compare in the whole country, 101's pretty good, right? So what they're saying is they're taking into consideration financing, like finances of the city and the people living there, the natural disaster risk, crime, which the city police chief says is down 10% year over year. And I'm trying to see, it didn't really tell you all the indicators. They just said those ones that I'm telling you right now.
So for all the people in St. Lucie County, specifically Port St. Lucie, fear buying guns in the last couple of years. Ha ha.
So what do you think of that, Johnny? Because you lived up there for a long time.
Yeah, I don't know if I disagree. I love Port St. Lucie. The only reason I left Port St. Lucie is because I hated the commute, and it's not a terrible commute. I just chose to not spend the time in the car. Right, that's it. Otherwise, I love Port St. Lucie, so not totally surprised, to tell you the truth. It's always had such a great vibe. I've always felt like there was a lot of growth there. It just felt kind of more family than anything, but there was plenty of diversity. Yeah, not surprised. Kids will be kids, punks will be punks, but that's just anywhere USA. But yeah, I always really felt good about my family in Port St. Lucie.
Yeah, I never really have
Feel the same
seen.
about Royal Palm, by the way.
Yeah, I was gonna say it. I feel like there's a lot of cities here where you feel pretty darn safe in South Florida.
Yeah, you do. That's true. But I have to say, though, in Port St. Lucie, you don't find a lot of like really severely economically depressed neighborhoods where you're driving through and the houses are just a mess and the yards are a mess. And you can see that in Broward, Dade, and Palm Beach County. And actually other even Indian River, you can see that a lot more than in Port St. Lucie. And I don't know why that is.
Well, I was trying to think why they would throw some sort of financial statistic in there, but maybe that's part of it. Just general, what's the income level overall, right? What's the average income in the city that they're doing? Maybe that has something to do with it.
Yeah.
How much money are people making?
Well, so all those demographics are definitely going to matter. I mean, for sure, all those circumstances. But when it comes to crime doesn't always just stick in its neighborhood, right? I mean, it branches out. So people don't just go to the next street to commit their crimes. I mean, they travel. I guess that also tells you that Port St. Lucie is just not a desirable place to go commit their crimes. Maybe
I wonder if they're
high-end enough.
Are they considering all the white collar crime, Johnny?
Well, the other thing is there isn't large concentrations of people in Port St. Lucie. Think about that. Like you don't have like big apartment complexes where there's, thousands of people clustered together in one area and stuff like that. Port St. Lucie doesn't really have a downtown, like a real downtown, like the way other cities do. And there's no like real business district,
True.
Which is one of the reasons why St. Lucie County has been so affordable compared to the other counties, which we'll talk about later in the market report coming out from this month. But I'm a fan of Port St. Lucie too, and St. Lucie County in general. And Fort Pierce, there's a lot of rumblings that's really gonna pop soon in a good way. And there's a lot of developers talking about Fort Pierce and focus on Fort Pierce right now. So we'll have to see how that goes. They've been trying to rebuild for a long time. And there's a lot of other cities that are in that kind of phase. Boynton Beach is a city like that, where there's a lot of potential, but it just never seems to reach the full potential that it has. Because Boynton Beach should be like equivalent to at least like Delray and Lake Worth as far as the downtown experience.
Yeah,
and
as you mentioned crime, though, I think that's the reason why Boynton hasn't gotten there. I think crime threw the brakes on Boynton's kind of growth.
Yes. And there's a lot of neighborhoods that, when I talked about driving through neighborhoods where the houses are just like really in bad shape, and they call it like the police department used to call it the broken window theory, right? So back when I was a crime reporter, they really got into community policing back then. That was the new thing in the late 80s, early 90s, right? And they were trying to get all the residents that were in high crime areas to cooperate with police to report criminal activity so they can push it out. So what they would do is how the police decided what neighborhoods to target was statistics, of course, but also they used what they called the broken window theory, which means if you driving through a neighborhood and you have a lot of broken windows and things not work, things just looking really, really shabby, not just like it needs a paint job, but like bad, you're probably going to be, it's a sign of criminal element creeping in or established. So, or the potential.
That's probably I mean, it's definitely profiling, right? Which I don't know if
It
it's
is.
great, but I think they might be on to something on at least that path.
And you're right about the profiling, but a lot of times they usually didn't do that if the community didn't ask them. So it would be neighbors, covering this. It would be neighbors begging the police, "Hey, we've got a problem. You got to help us," because the crime was like so in there.
Yeah.
And that was really interesting to watch all that at the time. And they would have marches and things like that, community people marching so that the drug dealers couldn't take over the corner anymore to sell their drugs and stuff like that.
Yeah.
And who
people that
wants to live
cared
like
about
that?
Sure.
Who wants to live like that? You know what I mean? So
I'm
you-
looking at a list of the cities just in Palm Beach County, Jim, because I was curious.
Mhm.
I think we're going to have an uproar of protest because some of these cities must have just been disqualified from the review. Like there's a city in Palm Beach
Mhm.
County called a municipality called Gulf. Have you heard of that?
Village of Golf in Boynton Beach. Yeah.
So that's an actual listed on the municipality. So Gulf in Boynton Beach.
What about
think-
Glen Lake or Glen View? It's a
Um,
little tiny.
Yeah, Glen Ridge.
Glen Ridge. Yeah, I sold
Glen
something over
Ridge.
there. That's so
So-
small.
I just brought up Gulf specifically on a map. It looks like it's a community surrounded specifically.
I
around
got in a
golf
lot of
course.
trouble in that city. I got in a lot of trouble with that city. It's funny you bring it up. That
So
city
what are their crime
is
rates?
gated.
That's my question.
Well, that city is gated.
Yeah.
It gets me mad. I'm even getting mad talking about it now. That city is gated. The
Yeah.
city is gated. So
Yeah.
you can't go into the city unless you go into the guard.
Yeah, they want to keep
Cities
you
are
out.
public. Cities are public. Public tax dollars pay for that. So when I was a reporter, if I wanted to cover something, I'd have to go through the gate. And I would tell them, I don't have to go through a gate. This is a public city. And these are public roads that you have
Like-
gated.
I
Is
know
they-
my rights.
And I lost. I got my butt kicked so many times. But I used to get in so much trouble over in that city because they used to get me angry that they did that. So the whole city, the whole perimeter of the city is fenced, right, with shrubbery and things like that. And then they have one entrance into the city, and it's gated. And you can't just drive that city to drive around and look for a house or something, like
Oh,
you
look at
can in the
this.
other neighborhood.
I'm looking at it on a map. They actually have their own Publix within the city limits.
Yes,
Wow.
that just
Cool.
moved. That's only because Publix moves across the street.
Okay,
It
so you
used
can
to
go to
be-
you go to that gate and just be like, "We're going to Publix," and they let
Yeah.
you in. I mean, right?
The Publix isn't in the gated part, but it
Oh.
is in the city. So
It's in the city limits.
yeah, but the residential part's all gated. So, and there aren't any other businesses. I think Publix is the only business there, and they have the city hall. And the city hall that's what got me so mad. The city hall is in the gate. So if you want to go to city hall, you know what they used to say? Do you have an appointment? And I'm like, are you freaking kidding me? I'm going to city hall,
Right.
Anyway, that's my little rant for the day.
I'm glad I brought
For
it
you,
up.
Golf.
Shout out to Gulf, Florida. I would have never thought.
Now that this is all we're talking about, all this, I'm pretty sure there was like 42 cities. I don't
I
think there was
see-
only 37 cities or
It's
39 cities.
39 county
What
municipalities.
about Cloud Lake? Do they have Cloud Lake in there?
Yep, Cloud Lake's on there.
Okay.
Yeah.
Okay. Like you don't hear
Uh,
about Cloud Lake much, do you?
No, I mean there's a lot you would certainly recognize most of the names on here, but Westlake has its own spot on there,
Brand new.
right? Augusta, yeah, 39 of them, Jim.
Yep. I have to go
Briny-
back. I
Briny
wonder if some
Breezes.
of them disbanded. 'Cause I think a couple. I don't know. I'm probably digging a deeper hole the more I talk about this. So talking out of my butt.
Disbanded. They're like, we don't want to be a part of Palm Beach County anymore.
Key West,
Huh.
Concrete Republic.
It's the Gulf Republic. How about that?
Yeah, the Gulf Republic. So we're going to take a break. On the flip side, what we're going to start off with is mortgage rate zooming and talking about the mortgage and the economy. And then that's going to slide into the market report of how that affects us down here locally. And let me tell you, the Fed, if you're dealing with real estate, the Fed is not your friend. And you know how we're getting the cold weather right now? You know how all those, when it gets too cold, all the iguanas start falling out of the trees?
Yeah.
That's what's happening with the real estate agents in this county.
They're falling out of trees like frozen.
Yeah, they're falling
iguanas?
out of trees and they look petrified. Ah.
So if you see a frozen realtor, leave them alone. They'll be all right. They'll come back.
Yeah,
Don't put
spring
them in
they'll
your home
hunt
to
on
warm
this.
them up.
Yeah, in the spring they'll come back again.
Yeah, you regret having them in your home for sure. We got plenty of time remaining. If you want to be a part of the show, if you got questions or comments, concerns, you want to jump into the conversation, you can dial up 877-927-6969. You can do it right now. It's a 4-minute commercial break. We'll get back. We'll start the next segment off with your phone call if you're interested. Of course, if you're not comfortable on the radio, always remember Florida Talk Real Estate is a .com, your one-stop real estate shop. And you'll also see a hotline there at floridatalkrealestate.com. Call it 888-973-7828. Answered by a live body. That's 24 hours a day, 7 days a week to get you connected to the pro that you need. Are you looking to buy a home, sell a home, refi? You have legal issues. I mean, we have a list that runs for days of the things that you can handle through floridatalkrealestate.com. Share it, know it, use it, love it. Remember it, most important, floridatalkrealestate.com. 4 minutes from now, we get back at it. Thanks for being with us every Saturday. Real Radio and, of course, streaming live, Facebook and YouTube. That's Florida Talk Real Estate. And remember, it's a .com too, y'all. Back 4 minutes from now. Great to have you with us every Saturday right here on Real Radio.
We're everywhere you need to be.
Service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yep, that's it. Toll free at 877-927-6969. If you have questions, comments, concerns in the world of real estate, you want to jump into our conversation, dial that up. Jimothy will happily get you there on hold, and you make the call, we'll take the call. We is me, Johnny C. Mike Rauch was with us on a Saturday. He's the mortgage guy from the mortgage firm. Hello, Mike.
Hey, Johnny. Yep, I am here.
Always great to have you with us.
Presente.
Presente? See,
That's what they say, like, you know, in the college when they're doing attendance in school in the morning, and then the Latinos will say presente, like I'm present, instead of here.
and all the gringos look around like,
Right. What did you used to do, Johnny, when they called your name?
I'd be all here,
You'd be like, yo.
here, here. I'm just here so I can go to football practice. Jimmy D's with us too. That's Jim DePola, and I've told you for over a decade, y'all. He runs a top producing Keller Williams team at Keller Williams Innovations. You'll find the Florida Home Pros team, and you'll find Jimmy D. How you be, Jimmy D?
Hey, good, Johnny. Good. We're going to get into some painful talk about mortgage rates and what's happening with the rates and what the Fed is doing and
Nice.
stories like that. So I figured in
Back
order
when
to
Jimmy was in elementary school, they answered like this.
Oh,
ugh,
Yeah.
right. So what we're going to do is in order to take a little bit of the pain away, we're going to offer a free an opportunity to get a free book for first-time home buyers. Okay, through this segment, we'll give you out the information how to do that. Just to try to give you a little sugar with the vinegar, we're going to give you right now. So Mike and I went to a very nice event yesterday. It was a charity event for casino night. That was a lot of fun, Mike, wasn't it?
That was really a lot of fun. A lot of people showed up. I think it was a really great turnout for this event. There's a gentleman in your office who needed some support, and so his friends and family and even friends of friends and family of family showed out, and that was pretty amazing. And it was a lot of fun.
It was. I wish I knew more about it beforehand. I would have put it out on the show and asked people to come because it was an open event, but it was a casino night and more than 100 people showed up, which was awesome.
that's great.
And everybody had a lot of fun. And it was for David, who in this office, I've only been in this office now a little less than a year. I'm in the Boynton Beach office right now. I used to be in the West Palm office for 10 years of the Keller Williams office. But I cover 6 counties, so I can be pretty flexible about which office I want to work out of. And but David, who we had the charity event for, has been in this office for 18 years.
Oh.
God bless him. And he had a very bad health issue, and we all came out to support him. And it's just really great to see that, and the support from everybody that came out, and the office to put that on was just really nice to see. And Mike, thanks for coming out yourself and coming out there and saying hello to everybody.
Yep, thanks.
But
I actually haven't played craps in a long
Yeah.
time, and I just got that feeling because I love to play craps, but I got that feeling back. I felt like it was fake, it was real chips, but there was no real money on the line. It was fake money, but I really felt like I was winning when I was winning, Johnny.
But
And I was
you had an
winning.
actual table though, Mike, right? So I mean, you were pitching the dice, like
Oh yeah.
Yeah, no, we had the table was full. This one lady went on probably like a, I don't know, 35 roll run.
Wow.
And when you're playing on the pass and come, instead of the don't side, that a 35 roll run, you can do very, very well if you're playing it right.
right.
So yeah, it was a lot of fun. It gave me the thrill.
Thinking about going to Vegas now, right? Got the itch. You could just go down to
Yeah.
Hard Rock too if you want.
They don't
Oh no,
have-
you
they don't
can't.
have
They don't
craps
have.
at the
That's
table.
right. They don't have craps there. I'm
Yeah.
a blackjack.
I'll tell you,
blackjack.
it feels like it was about a year ago. We were walking around down there, and I think it was last November. We're walking around. I want to say it was maybe after a Metallica show. It was, yeah, because Metallica's coming up November 6th. It'll be almost a year to the date. So we're walking around after that show, and they have the tables out. Like, they're ready. All they need is the green light. They need whatever yellow tape to get dealt with. But we're standing next to the craps tables going, oh, man, come on, baby. Like, they're there. I'm touching them. It's like, here we go. Because there's nothing worse than sitting out of the electronic, the dice pop up on the little popper. You're like, this is so not craps.
No
No.
way, it isn't.
But those tables were such a tease, and here we are a year later, and
Still can't use them. Yeah.
no.
It's the other thing. Jim and I sat down to the blackjack table, and we get there, and there's a couple real estate agents, ladies playing, and they're all like winning, and they're kind of winking at each other, like, "Oh, this table you can't lose," because the dealer, he's being very playful. He's like looking at cards. He's like, "Are you sure you want to hit that?" Whatever, and kind of giving them hints, right? Because it's not real money, so he's having a good time. So then I'm like, oh, I think I got this figured out. I'm like starting to bet big, thinking he's going to give me the right advice. No, he gives me the opposite advice, and I'm falling for him. So, oh, I see how it is. I see. My hair isn't quite long enough, Johnny.
Nope, no, you didn't. Your lashes didn't have the right curl.
So then I'm reading him opposite. I'm like, oh, I'm going to do the opposite of what he's telling me, and of course he sees that too, and so he's messing with me. So yeah, I lost all my money that I made at the craps table on the blackjack table.
So it really felt like a Vegas experience. Right? That sounds more like it, right? So one of the things we were talking about over there, though, was the interest rates, right? So Mike looked a little ashen. and he said, what happened with Freddie Mac this week? I go, we only went up 0.02. So let's get to that. Last week we were at 6.92. This week we're at 6.94. Not, I call that flat. I also checked back to October 1st. So from October 1st until today, we went up about a quarter point in the 3 weeks, of October, which really isn't too bad compared to the other months. A quarter point for 3 weeks into October. That's not too bad, Mike, compared to some of the other months. Some of the months we had a point and a quarter in 1 month.
Yeah.
So we're still up there, but Mike isn't agreeing. And this is why we always say we use the Freddie Mac report for a basis just to show you where the trends are, because the interest rates are twitching around so much that Mike's numbers are very different than Freddie Mac right now in the upside. Because Freddie Mac's report only comes out once a week, and there's a lot of other data that comes out minute by minute. So what are you seeing, Mike?
So Freddie's report comes out every Thursday, and it's also a national average, right? So they're basically just taking all loans that were written of a certain type, 30-year versus 15-year, and they're saying what was the average of the interest rate that was locked in, essentially, and the points and fees associated with that rate. And so the Thursday to Thursday, and so if anything like really significant, Jim, happens, say Wednesday, Thursday, Friday, remember they're averaging the whole week.
Right.
So they're averaging from Friday the last week, or from essentially Thursday the last week to Thursday that week. So if the front half of the week is flat, and then you get 2 days of turmoil, right, in my world, right, where rates are just like, I talked to you yesterday, and we looked at rates yesterday, and now we're trying to lock in today, and it's different, right? It's substantially different, either in the rate or the points associated with getting that rate. That's a very real thing for buyers, and I'm dealing with that a lot, right? Where day over day it's shifting. And so if we were talking on Tuesday and then Wednesday it changed, Jim. It changed pretty significantly. So it's a
Mhm.
trailing indicator, but we use it because it's what other measure are you going to use? I mean, it's reliable. It's been around for however long. And so it's a good indicator of what's happening with the market. I think, Jim, when you look at like the week over week, you can lose sight of what's happened in like a 2-month span.
Oh
Right?
my
Like I'm
gosh.
like
Yeah.
September
Mhm.
1st, it was 5.66 on the 30-year, and now we're at 6.94. Right? So
Yep.
2 months, month and a half, right? Month and a half, that's one, a point and a quarter on Freddie's report
Yep.
over a 6-week span.
Yep.
So
And
yeah, we were flat last week to this week, but holy cow, it's been on the rise. It's a direct result of the Fed's economic policy. And where's it going? As far as I can tell, Fed's going to continue a couple more increases even this year. Couple more increases this year, probably some more increases into next year. So when's it going to stop? I don't know.
now
How high they're going to go? I don't know. But this is kind of you got to be thinking about this as the new normal. You can't be thinking about it as, oh, let's wait. And I don't say, like, I'm not saying, hey, buy now, buy while you can. That's never my philosophy. But if you're thinking, I am either waiting for prices to come down substantially or rates to come down substantially, I think you got a long wait ahead of you. And
and the
so how
market
long can you wait? Yeah.
the market reports might reflect that, which we're going to get into a little later. So the thing is, let's talk a little bit about the Fed and how it's affecting the real estate market. And then I want to get back to a real life example of how buyers about preparing for these crazy interest rate increases week by week, day by day, how you kind of compete against that. But let's just set the foundation with the Fed. Okay, so people that are saying, I'm going to wait because I'm expecting something to change as far as the interest rates, like they're going to back off or that they're going to go back down to any, significantly anytime. The Fed reports that are coming out, or the reports that are coming out right now, are not looking good that that's going to happen. Okay, so if you're betting that, you're really betting against the house big time. And the reason why is we still have a very strong job market. Okay, but more importantly, that last inflation report, Johnny, it came out really bad, right? So that you probably read a little more about that than me.
Well, and we've all been on the same page too. So the idea of raising rates to control inflation was laughable, and they should have never presented it that way, because anybody with half a brain goes, "What?" They should have just came out, look, we're trying to cool down the housing market, and this is the only way we're going to do it. And then, hopefully we'll stop printing money, and then we can work on inflation. I don't know that these were ever connected. They tried to make it seem like they were. We'll do the interest rates increases and inflation's going to come down. It's not an if-then proposition. So yeah, I see things.
So,
I got a question for you guys. Somebody asked me this and I don't know a clear answer. The question was, like, with these increased interest rates from the Fed, who's making out? Who benefits from the higher interest rate on the Fed lending rate? Does that mean the Fed is raking it in? Like, what's the answer to that? So if they were lending money at 0, now they're lending money at 5% or 4%.
Well, let me ask you this. That's an excellent question. So when they say, because I never thought about it that way, when they say, what I always thought was the Fed rate was the interest rate charged between banks to lend money to each other. So do you think, so what I always thought is, like, if I was Wells Fargo and I needed to buy money from Chase, I'm going to get 3.25%, right? Like whatever the reserve rate is at that point. But maybe that's the brokerage fee to lend the money. Like the Fed goes, hey, you want to borrow money from Chase? Give me 3.25%. I don't know. What do you think?
The Fed is lending money to the banks, like the Federal Reserve.
I always thought it was
bank
lending. Maybe. Yeah, so maybe that's their VIG.
Yeah,
that's
but
their commission.
What happens to it? Like, where does it go? Like, what's I must be missing something, because it can't be like, hey, the Fed needs to line its pockets. Let's hide the interest rate. It's all about economic policy. But the question is, like, where does that higher interest go? It's got to be somewhere in the markets.
Now you got me thinking.
Now you're getting down the path of all of us that have been on audit the Fed train for 20 years.
Yeah,
Oh,
yeah,
Yeah.
exactly.
Yeah.
Right.
So do you have any insight on that, Johnny? Because I know you kind of watch this stuff. Is
Yeah,
that
so that you just touched on the only bit of insight I have, because the Fed is so shielded in
Mhm.
everything that they have, the reserve, hell, even our gold reserve, like,
Right,
nobody
exactly.
knows what we have, which is
Exactly.
why we can't go back to the gold standard, because they're like, well, we don't have any gold. What do you? At least the way I can surmise. So yeah, you nailed at least the lump of the quote unquote knowledge I have as far as it goes. But yeah, that's kind of been, the fuel for the fire for so long, for people to like audit the Fed, figure out what the heck is going on with
we
their
need-
spreadsheet.
I need to. It came up, and I had never really thought about it on those terms. I don't know why, but I was like, well, gee, I don't think they're making out on this. Like, that's not what it's about. But the question is, where is that? Where is it going? Right?
Yeah.
It's an interest, so it's definitely, it's a cost to borrow the money. Where does it go? I don't know.
That's good.
Now I could tell you,
So-
banks don't make out on it. It's not like the banks are lining their pockets, because they're basically, their rates are moving based on what they're borrowing, right? So they're essentially, you kind of benefit of the doubt, right? Banks are making the same profit margins whether the Fed lending rate is 0 or the Fed lending rate is 6%. The banks are making the same profit margins, so the consumers' rates go up because their costs go up, essentially.
Mhm.
But who's getting?
Well, I think the answer to that question, Mike, is everybody from the top down, because it all gets adjusted. They're all making money on it, right? So, and because we as a nation, we're not going to stop spending money we don't have. That's not going to happen. We're gonna, as a nation, there are fiscally responsible people listening to us right now. There are fiscally responsible people on this radio show. Some that are still learning. We're not going to stop spending money we don't have as a nation. Not going to stop that. It's not going to happen. So
Yeah.
I think all the way down, I think they all do well. I don't think the banks or the credit lenders or anybody go, oh, this sucks. We're still going to spend money we don't have.
So
If given the ability, if you give us the credit, we'll do it.
Yeah, exactly. If you're still extending, and this maybe goes into one of the topics Jim wanted to talk about, if you're still extending credit, then there's going to be consumers out there who are going to utilize it.
For sure.
Whether it's a mortgage loan or an auto loan or a credit card. Right?
A credit card to buy some crap that you absolutely don't need and shouldn't be buying right now, and you're going to be spending 22% on it or something. Whatever. I mean, who knows?
Jimmy.
Yeah,
how much was that shirt?
No,
how much was that shirt, Jim?
Yeah,
what do you
Jim.
say? What do you say about that? What's
You
wrong with
didn't
my
need
shirt?
It looks
nice
like a
on
very
you.
expensive shirt. That's all.
It is not a very expensive shirt. So
Orange looks good on you, but you really didn't need it, Jim.
So with the Fed, getting back to like the Fed's actions, right? It's very clear that they're not really caring much, that the real estate market is the biggest probably victim, if you will, of these high interest rates. So it's really affected the real estate market the most. And the other thing is that the real estate market, the ripple effect, real estate is considered like one, I think, the top 3 economic juggernauts of the country. Consumer spending is, and then real estate is a big component of that, because every time a house is sold, the ripple effect of what happens is pretty amazing. First, you have all the upfront costs of buying the home, the inspections, the money to the county for taxes for the sale, the real estate commissions, the home inspectors, the mortgage companies, they all get paid, right? Then you have the person moving into the house. Then you have moving costs, movers, and doing all that stuff. Then you have the preliminary upgrades to a house before you sell it. Those are all costs. And then when you move in, people are fixing up the houses. So it just ripple effects all over the place. So when the housing market,
as we learned last week too, a year later, there's probably a boost in tax revenue for the county.
Exactly. All of that. Right. So all of that's happening. So it affects everything. So when the housing market gets crimped, it really affects a lot of other things very quickly. And right now, that's what we're seeing. And we're going to get a little bit more into that market report. But the other thing is the Fed, because the reports are coming out still so strong for inflation, he's going to, the plan is that he's going to do another probably 3/4 point again in November, first week in November. We're talking about like 2 weeks from now, and it might be another 3/4 again. And I
And
bet
it might
you
be
that
another. It might be another half in December.
yes, and maybe even not. It might be people are betting it's a half now, but people never thought that we would see 3/4 when they first started the beginning of the year what we were doing. So I don't see really any slowdown on that. Prices, I don't see how prices are going to withstand this, but the market isn't really reflecting that yet, which we'll get into a little bit. So now so on one side, if people are saying, I don't want to get involved in this real estate market as a purchaser because I want to wait because I'm expecting the interest rates to go down, that's probably not happening in a long time. And it may never get down to the things that you consider normal over the last 5 years, let's say. That's probably not going to happen.
Isn't it crazy in just a few short years, a mindset, a complete mindset about lending, about a home ownership has completely been changed. If I take you back 10 years ago, I'll be like, I'll get you under 7%. You'd have been like, do it now. Where do I sign? And now you're like, oh, it's like 6.9%. People are like, oh, how the hell does that happen in like 3 short years?
I was talking to a guy at the casino light last night where his first house, when he bought it, he's in his probably 40s, late 40s, early 50s. He bought his house. He got 10% interest rate. And his father came over and patted him on the back and said, what a great job. That's an awesome rate, right? 10%, right? So the thing is, I almost feel like we have our memory erased of what it's like. It's like we have no basis of what happened in history. Right? They don't have any idea, and they just basing it on what happened during that crazy time where we had COVID, right? And the rates first we had the before the Great Recession, then we had COVID. We had a little gap in between.
Yeah, that's the only reason. The only reason the rates were where they were is because of all the quantitative easing from what essentially
09,
08 on. Yeah.
Yeah,
I mean,
yeah.
as we transitioned from Bush into Obama, we were in, a mess.
Massive.
Oh my God. And I didn't agree with a lot of what they were doing. I was wrong. Fortunately, I wasn't in control because I was dead wrong. But they moved these numbers to these artificially low, and we stuck there. And that's why we're getting the aggressive movement now, because they never brought it up as the economy was improving. So, but we're still in a great spot.
Well,
here's a good thing to look at, guys. Look at what the Fed lending rate was historically, and look at what the mortgage rates were during those times.
Do you know what the Fed rate was during that boom, right before the crash?
I'm looking at it right now. So basically from 94, basically the second half of the 90s into the early 2000s, the Fed lending rate was anywhere from 5 to 6 to as high as 6.5. Right. So as low as like 4.5 up to 6.5. So we're not in that territory, but we're probably approaching that territory. And so this is late 90s into the early 2000s, and look at Freddie's report for the same time period. Right. So rates were at 7.5, 8.
The last 20-year average was 7.87. The last 20-year average, not the 40-year. The 40-year is 7 to 9, but the 20-year is 7.87. So even with these low interest rates for as long as they've been, we're still at a 20-year average at 7.87, right? So that's pretty, to me, that's pretty amazing. And that average, the 40-year average, has those years where we were at 18%. And in the 20-year average, that isn't included. So 7.87 is the average. And you know what? Our economies weren't horrible or anything for real estate. There were a couple blips during that time, like you always have, but they weren't like terrible, terrible times where the Fed reserve rate was at 6%, and so now the flip side, let me just play devil's advocate for the people I'm waiting for the things to change. There is one way I can see that happening. And it's because of what Jerome Powell did in 2018. In 2018, he started really ratcheting up the reserve rate from 0 again. And then by March of 2019, there were articles coming out saying that he wished he didn't do it because he was worried about inflation rearing its ugly head. But we weren't even close to 2% inflation at that point. But he was afraid we were going to overheat, so he started raising the reserve rates. Then he realized we didn't overheat. So then he said he wished he hadn't done it, and then he stopped. And then he actually took it back during COVID. What he had put in there, he started taking it back during COVID.
No, they
So
took it back. It like went all all the way back.
yeah,
Right?
yeah,
Like
back to
down.
zero. He went back
Yeah.
to zero. He reset and he started over again. So is there a chance that if there's some external factors that we don't know about that rears its ugly head, a la world conflict, really severely affecting supply chains, the massive inflation happening overseas, the energy crisis that we're going to see in Europe, all of those things, that might totally change the dynamics, and maybe you would see the interest rates go down again. But I wouldn't bet on that. I wouldn't bet on that. But that's the only way I can see that
Well,
happening.
if you are the person who is sitting on the sidelines, and maybe you can, right? Like you're perfectly fine where you are. Your living situation is affordable. You don't need to move, and you just say, you know what? I'm just going to sit back and wait for the ball to drop on this thing. You should have some sort of indicators in your head on what indicates the the time to go, right? Are you looking for rates at a certain level? Are you looking for home prices in a specific neighborhood at a certain level? You should be watching those things if this is the market game that you're trying to win. If you're just saying I'm just waiting for the whole thing to come crashing down, like how can you make that? How can that be a serious prediction, Jim? Other than historically, what goes up must come down type of
Yeah,
thing,
and it's
right?
just like I keep thinking about this buyer that I met in January, and the interest rates were like 3.1, okay, 3.2, and he felt that we weren't at 265 anymore, which is the lowest rate ever, right? We're talking about 0.7% difference, right, from the low time ever. And he was on a budget, didn't have a lot of money to put down, but he had been renting for a long time. And he decided we set him up for a search. He didn't like the housing quality for the price range he was in, and he was betting that everything was gonna go into the go into the toilet. So he was betting on that. Now here we are in December, 10 months later, almost 11 months later. The interest rates went from 3.2 to 7% on Freddie Mac. But in real life, Mike, after you pay PMI, because he had to pay PMI, what do
Yeah.
you think with PMI? What do you think? Let's say FHA PMI, just because it's a set rate and everything. What do you think somebody would pay today? Like with 650, 660 credit score, nothing
Oh, geez.
spectacular.
It's
It's hard.
Yeah. So Johnny just hit it on. You're talking 7 plus 0.85, right, Johnny? Is that
Yeah.
what
Yeah,
there
that's
you
what
go.
I'm thinking.
I mean, it's
785.
easy to use round numbers, right? So
Right.
7% on your 30-year rate,
So,
0.85 on your MI factor, life of the loan. Boom. That's what
so it's
that's what you're
two and
looking
a
at.
quarter times more than what he was looking at in January for the
Yeah.
interest rate, right?
Yeah.
And then on top of that, the prices really haven't gone down.
Not enough to make up that gap. That's
Not
for sure.
enough to make that.
But at some
So
point, Jim, we
and
have
we do
to.
know this: rent has gone up for sure.
The rent is too damn high.
Yeah, the rent
Too
is
damn
too.
high.
We need to bring that
But
back. We need to bring
it's
that audio back.
listen,
The
it's
rent
all
is too damn high.
it is interesting to look in hindsight, just if you're trying to make predictions about the future. But if you're in this housing market, it's really, really depressing to say, oh geez, what if I had done this a year ago, or what if I had done it a year and a half ago, right? Like it's just, you can't get that back. It's gone. You have to accept the current terms. And our philosophy, and I think we're all on the same page on this, is simply, if you can get into a house that is affordable, so a house that checks as many of the boxes as you can, you're not going to get everything, but as many of the boxes as you can, and is it a payment that is affordable, your income is stable, your debt's stable, you don't have on any any major changes, the you don't wait, right? Like I think the answer is always you buy if you can get into that stable situation. And if you have the opportunity to refinance into a better rate in the future, you do. You don't count on it, right? You don't count on rates being lower anytime. Like Jim, some people are like, well, let me get into this 3-year ARM, 3-year interest only ARM, because rates are going to get better and I'll refi. Don't do that. You can't, there's no guarantee you're going to be able to refinance within the next 3 years. Either rates have to be favorable, housing values have to be favorable. So both of those, and you of course have to qualify. Both of those factors are are really important. And so you can't plan on that happening. If it comes that's available to you, of course, take advantage of it, right? But the main idea is, if you're out there, if you need to move for whatever reason, you simply get into a situation that's affordable. You have to take your lumps. You can't compare it to what it was last year simply because it's gone. You got to deal with the now.
Let me ask you this question. I had a customer that's I'm gonna talk to you about off air later today. Donna, you know about Donna a little bit. She lives in a house. She lives in a house in Green Acres, and she needs to renovate the house. So she was thinking about a refi. So I said to her, "We'll get you over to Mike, but there's, based on your needs, you might be better off doing a HELOC, but Mike can help you figure that out, because a home equity line of credit with your lender is hundreds of dollars of costs, but trying to get a refi is thousands of dollars. But more importantly, she has a 4.75 interest rate currently. Okay. So I said to her about the HELOC, and she said that her bank, the Wagon Wheel Bank, doesn't do refis, doesn't do HELOCs anymore, only refis, right? So if somebody wanted to,
I wonder if she's talking to a loan originator who doesn't want to do a HELOC. He's like, oh no, we're not doing those. Just cash out. That's all we can offer.
Yeah, so maybe, who knows? But she says that Wells Fargo won't offer that. So, which I've read about. I've read about that the banks are like not being very cautious about doing home equity line of credits and things like that right now, because they're worried about what's going to happen in the future. The banks are betting right now that we're going to see a higher foreclosure rate. Now, we're at a record low foreclosure rate right now. That's the other thing people don't get. People have in their mind that we're in this horrible economy. The inflation is super, super high, but right now, at least right now, I'm not saying this is going to hold, but we don't have a lot of defaults on stuff, right? It isn't like super high defaults on cars or credit cards, or higher than before the craziness. Okay. In fact, we're lower.
I think the banks are right.
I agree.
It's coming. All the money that people stocked up during the pandemic, it's all been depleted. And their spending hasn't slowed down. It's coming for sure. I don't know if there's a wave of foreclosures, but it feels like it's coming.
I know, it's weird.
Johnny-
I kind of understand where you're coming from on that, even though that everybody's fully employed. That's why I'm going to keep going back to that. I don't care about anything until we start seeing the unemployment go up, and that we have like serious layoffs. If that happens, I don't want that to happen. I really think that's what's really going to affect.
How about this for a little bit of anecdotal evidence? We didn't talk about this with the storm, but we usually have a conversation following a storm as it relates to disaster and mortgage forbearance, right? We didn't talk about that with this storm because it didn't really come to our market.
Here.
But it wasn't my client, but another fellow in the office who had people out pre-approved shopping. They got into contract, and it turns out this gentleman called his lender and took advantage of disaster forbearance, which now eliminates him from being able to purchase, to get qualified on this new loan until 3 months have passed. It's whatever. But how about that? Somebody out there who doesn't really need to take advantage of it, but their lender might have called, or they called the lender like, hey, can I get a 3-month forbearance, on this because of the storm? Right?
Don't do the forbearance unless you need the forbearance. Don't do it. Don't do it. Don't.
But
Just
maybe
don't.
he did need it and he took advantage of it.
Well,
You know what I mean? So
yeah,
maybe that's a little indicator that times are tough.
Well,
if you're gonna do it though, Jim, if you're gonna do it, please understand the terms of when you have to pay that back.
Remember, Johnny, when you tried to do it?
Johnny did it as an experiment.
Right, it's the experiment.
We did an experiment. Me and Mike, we did an experiment. Jim was like, well, let's see how this goes. And the reality was it felt great right up to the point where they were like, oh, hold on a second. I want to make sure I understand what you're saying. So the 3 months I don't pay you, and then on the 4th month, I got to pay you 4 months?
Yeah.
Yeah.
That's the normal.
Yes. So don't do the mortgage forbearance unless you need to. During Irma, we had a couple people we had to bring over to the law office of Paola Krasker to handle their issues, if you will. And the financing, that's so important. And the thing is, Mike, I got to be honest with you. If somebody was out shopping for a house, but they're also applying for mortgage forbearance, that there's a disconnect there, right?
Yeah, it's
So
it's just
let's
one of
be
those things
real.
people don't think about. Like it's the same way like people manage their money, like when they're moving money around and maybe they got cash and they're depositing everything. They don't think along the lines of how do I get approved for a loan. They're just like, this is how I operate my life. So I'm sure he's completely blindsided by the news that, oh, wait a second, because you did that, you can't really undo it now. You simply have to come out of forbearance, catch up on your mortgage, all of these things that a consumer would never ever think about. But yes, I agree. If you're having trouble paying your existing mortgage, why in the world would you be getting into a second?
There you go and running around looking.
And,
So
I wanted to talk about the
well, wait,
HELOC, Jim.
I want to go back to what we were talking about just for a second. The person that needed to, do a refi or a HELOC to fix up their house, right? So my question is, if they have enough equity, would they be better off doing a second mortgage and keeping their 4.5, their low 4.75 original mortgage, and then take out a second mortgage just for the repairs and pay the higher interest rate for that? Or would you do the full refi of the whole thing?
So you guys know the answer to this. I would never advocate replacing a lower interest rate with a higher interest rate in general, right? So there may be some circumstances where the cash out makes sense, right? If you're trying to tap into the equity and you're trying to have the least amount of impact on the monthly payment that you have to make, right? It could be that your first mortgage plus the loan on the second payment would be slightly higher than a new 30-year loan, even at a higher interest rate. It's possible that the combination of the two payments is a little bit more than the combination of the one payment. But of course, over the life of the loan, you're stretching out into a new 30-year loan. So that's a lot of money over the life of the loan at the higher interest rate. So it could be a circumstance where if the goal is to tap into the equity and have just the very lowest impact on your mortgage payment, total housing payment, it could be that that's it. But I would never advocate replacing a lower interest rate with a higher one and extending the term on the higher one. I would advocate for the HELOC all day long.
I wasn't even thinking about that. And in this case, this real life example, the owners have had that mortgage for over 10 years.
Yeah.
So if they did the full refi, they're going back to a third, paying it off in 30 years. They've already paid off a third of the original 4.75 mortgage.
No, in this one circumstance, Jim, you said it was Donna, I think, who's trying to go to their wagon wheel. That's her lender to do this HELOC. Mike, she doesn't have to go to her lender for a HELOC, though, right? She can go to anybody that offers it, right?
Yeah, anybody that offers. So home equity lines and home equity loans are typically the realm of the brick and mortar banking institutions, right? So the wagon wheel, your whatever, your local branches. That's typically you would go. Certainly, credit unions are a really good source for home equity products because they typically have the lowest cost to do it, and they've got competitive rates. So certainly, she could go to anybody who's like, even if her lender, the one who has her first mortgage, or her bank isn't offering them. There are banks that are offering them, but I think they're skittish, like Jim said. So the terms on the HELOCs are less favorable than they have ever been. Things like, 5-year draw on your HELOC and then a 10-year repayment, right? So not a 30-year repayment or a 20-year repayment, but a 10-year repayment. So those can turn into a pretty big nut, right? To make.
Is the typical HELOC how long is the draw point typically?
So there's no typical, Johnny. So it could be 5 years, could be 10 years. But what's changed? Usually, it used to be like a 10-year draw and then a 20-year repayment phase, right? So you kind of had like a total of a 30-year amortization. That's hard to find right now. So imagine a 10-year draw and a 10-year repayment, right? So you draw on this thing for 10 years, you're making like interest only or minimum payments. Then all of a sudden you get this big balance that has to be paid off over 10 years. Imagine like $100,000 car on a 10-year repayment. That payment is going to kill you. I mean, it's just going to be huge.
Yeah.
But there's risks for these lenders, Jim, because when you're a second loan in the second position, you've got no recourse.
We know that really well on this show.
Yeah, if things go bad, if housing prices go down and people get in trouble and you just stop paying that second, You can't
The
do anything.
seconds rarely got paid when we were doing
Yeah.
this in 2012 through 2015. The second ones were almost always wiped out when there was houses were upside down.
Okay, so just help me with this, so I make sure I'm following along. Somebody gets a HELOC, home equity line of credit, and things just go financially terrible for them. They end up in foreclosure on their home. When the bank takes, they lose the foreclosure, the bank takes the property back. That HELOC is just kind of like SOL. They're not getting paid.
The way
If
it
it go- if
works
it go-
is when the house is foreclosed, or if it's a short sale, it's in order of being first, second, third, fourth in position. So the first position is the first mortgage.
Right.
Sometimes it's the IRS, but it's the first mortgage, and then it's secondary people below, and then whatever money. So the first person gets all their money, and if there's any money left over, it goes to the second, and then the third person, if there's any money left over, and the third debtor
I can see
or
why they're
creditor, if
skittish
there's
then.
any money left over.
Yeah, and I totally understand why they're skittish about that. We haven't showcased fiscal responsibility in the housing market for the last 15 years.
Yeah, yeah. So, want to just wrap up with a couple of things about this. Now,
I thought we were doing a wrap off for a second.
yeah. So, yeah, that'd be funny.
Yeah.
So,
Johnny got the meat.
the other thing I wanted to talk about was, and we kind of touched on this, Mike, a little bit, is the availability of credit. So we were just talking about how it's harder for these HELOCs, that the banks aren't really offering as much because they're worried about the risk coming up. And I'm reading these reports where they're saying that there's less credit availability for jumbo loans and other loan products. But when I read the articles, it doesn't really say what the definition of credit availability is.
Yeah.
Other than it's harder to get a loan now than it was a couple of months ago.
Okay.
Are you seeing that? Like, have you seen like credit score requirements change, or reserves, the amount of reserves you have to have in the bank after you buy the property change, or those kind of things?
No, I haven't seen any tightening of the qualifying guidelines
Mm-hmm.
as a mechanism of turning down loan volume, right? So I think when we're talking about credit limitations, right, or availability of credit, you're basically saying how many loans are closed in a month, right? And we, right, so whoever the market movers are, whoever it is, saying, hey guys, we need to turn down the volume on this segment of loans, right? We don't want this many 15-year fixed rate mortgages in the market, right? We don't want this many 5/1 ARMs in the market. So the way traditionally that you control the volume of the loans that are being written are with interest rates, Jim. So if you want to turn down the volume, and this isn't the Fed rate, but this is the gap now between the bank to bank stuff, right? All of that. But ultimately the lenders can control their individual volume even, right? By increasing the gaps. Like, so their profit margins are higher, right? But they're doing that not to get more profit. They're doing that to control the amount of loans that are being
So
written.
they're almost saying, hey, if you want to borrow money from me, you're going to have to pay this. And if you don't, I don't care.
Yeah.
That's kind of what the lenders are saying, right? If
Yeah,
you
and-
want
and-
the money, this is what it's going to cost. And if you don't want that, I don't care. I'd rather not do it.
Yeah, so you can't just like deny loans willy-nilly, like, oh, we're only doing 100 loans this month of this type, right? You can't do that. If people are applying and they qualify, and you can't offer rate A to this couple and rate B to this couple, right? Like, that is not allowed with fair housing, fair lending rules, right? So how do you do that? You basically say, hey, we're gonna make the rates that we have available are going to be this much higher than the norm, because we want our loan volume to go down. So yes, we're still going to do a certain amount of loans. And yes, we're going to make more profit on those particular loans we're doing. So maybe like the money for them evens out, but the amount of volume that they're writing, right, the loans that they are writing, or the money that they are lending, goes down because they're simply eliminating people for, it just makes it harder to qualify, right? So maybe the debt to income is higher, right? Or maybe the cash requirements are higher. So you're not changing the rules. You're not discriminating in any way, you're simply making it harder to get the loan, and the effect is less loan volume done on a lender by lender basis. So that could be what's happening. I don't know. I'm just trying to think of mechanism. But certainly they're not changing the rules for qualifying, right? They're not making it harder to qualify.
The thing that I'm wondering if this is like a little canary in the coal mine where the banks are saying, "Hey guys, we're expecting some, patchy waters coming up,"
If you
and they're
remember back
hedging
when,
their bets.
yeah, back when COVID first started, we're talking like the beginning of 2020, rates, like economic policy was, okay, zoom back to zero on the Fed lending rate. There was a very sharp, like, within a month, they're like, we're back down to zero. We see a big problem coming. We don't want to stifle the market at this time, right? And there was such a run on refi business that there simply wasn't enough money in the lending world to fund all of these loans that were all these loan applications that were coming through. So the way that they turned the nozzle to turn down the volume of money flowing was to increase rates artificially, right? So that you essentially had it was less attractive, right? They weren't pricing people out, but they're like, okay, so you can't get your 2% rate right now. It's going to be 7%. So you want to refi at 7%? No. Well, so it didn't make sense. Like that was the thing. So that was a mechanism that they just said, holy cow, there's not enough money in the mortgage-backed security world to fund all these loan applications. We just can't do it. So they had to turn it down. And of course, once they figured out what kind of volume they can handle, they eased it up, right? And so then we had a 2-year run of refi craziness, Johnny. I mean, refis were just everybody. I told you, everyone and their mother, right? Including my mom. We're talking about refis. But it's that same type of thing, if that's what's happening. I don't really see that, Jim. So I'm not sure what report it's coming from, but that would be a mechanism to do it. You increase rates to turn down volume on total loans that are financed.
It's going to be really interesting to see how all this gels out. Now, I wanted to talk also about another little bright spot in the market, and then we're going to get in first-time homebuyers just real quick, and then we'll go ahead, Johnny.
Well, I just before we get into another subject, I want to make sure everybody knows that you are welcome to join us. If you're interested in the conversation, you have a question, comment, concern, please go ahead and dial 877-927-6969. You can be a part of the show. Jimothy will line you up. You make the call, we'll take the call. And of course, if we're hitting a nerve, you do have questions, but you're not comfortable on the radio, or you need the services of these pros, the entire team is available to you at floridatalkrealestate.com. We call it your one-stop real estate shop for a reason, because you have absolute the best of the best all together, one spot. So you can just go to floridatalkrealestate.com. You can call 888-973-7828 and say, hey, here's what I got. And we'll connect you to who you need. We'll make things nice and smooth for you. It has been a pleasure for over a decade helping so many in our listening audience. You can be next. FloridaTalkRealEstate.com, your one-stop real estate shop.
Thank you, Johnny. Thank you. A little bright spot in these high interest rates is that the developers, here's another canary in the coal mine, the developers are now offering higher than average commissions. They're offering, I just saw one developer offering over $40,000 in either upgrades or up to, I think it was $14,000 to pay for closing costs for buyers. So new construction, if you handle it right, you might be able to get a very good deal right now compared to 6 months ago. And you're also, there's still pretty big demand when you're going in for the lots. And most of the communities are still kind of like a little elbowing to get the lot over other people. But there's still a lot of quick move properties right now. There's a lot of properties that the developers have built. The people have probably walked away from the contract, I'm guessing. And now they have a house that's built that, right, had to, because the interest rate's rising and the supply costs and everything. So those properties now are available to the general public, not for the person that actually had it built. And those deals, they're offering more incentives to get those things moved. So if you're interested in new construction, you got to give us a call. I've been looking at stuff in Palm Beach and St. Lucie and Martin County a lot. And there's a lot of the developers have these great discounts. So give us a call if you're interested in finding out about that. And that is a little bright spot. Developers, even in June of this year, they weren't offering anything, and they were almost trying to push the realtors away. They were offering such low commissions. They almost like, we don't want your business. We got enough buyers without you. Now they don't have enough buyers, and they're all like, hey, we'll give you 5% if you find us a buyer. Right.
Well,
And now
there's layers of awesome there too, because not only are you talking about incentives to possibly get into new construction, but you're going to get the best rates possible for your homeowners insurance. And we all know that that is the difference
huge
for so many people on whether they're closing or not these days, and only going to get worse.
That's a really good point, Johnny, because ultimately it's about what's the housing obligation, right? Principal, interest, taxes, insurance, HOA. And so that insurance number, I mean, half, right, is probably pretty safe bet. Half, right? If you got, could be 3,000 on one home and 1,500 on a brand new construction, or 4,000, 2,000. Like half's pretty, and that's a pretty big thing with the monthly payment obligation. I will say this, Jim, if the developers, who are essentially sellers, are incentivizing buyers in their markets, guess what? In the regular market, resale market, like existing homes, sellers are also incentivizing buyers. So
that's the next thing, Mike. I think that we're going to see this. I think when we were first starting out, we were able to use the down payment assistance program plus seller concessions, meaning that the sellers helping support the buyer's closing costs, down payment, and prepaids. Where we were getting people into houses where they paid almost nothing. And once in a blue moon, they actually got a check at closing. Listen to this. They were buying houses with us and getting a check at closing, because between the down payment assistance and the money that the sellers were offering, they had a little money extra over. Now, it wasn't a lot, but imagine buying a home, especially first-time home buyer, and you move into the house and you didn't pull money out of your pocket, and you're getting a check at the closing table.
Yeah,
that's pretty cool.
Get a check. You're like, okay.
I'm getting tingles thinking about it now. I love when that happened. Hey, our owner just got paid, $2,700 to buy this house, right? Isn't that awesome? I love that. So we might be getting to that market eventually, but you can get discounts now to help. And that's another thing we want to talk about, is the down payment assistance stuff. The Hometown Heroes is out there, and we also have the U.S. bond. Is that what they call it, Mike? The U.S. bond down payment assistance?
I mean, you're talking about, these are programs through Florida Housing, which is a state agency that basically has funds for down payment assistance, and even kind of, they have a first mortgage program and a second mortgage program. But yeah, both of those that you're talking about are through Florida Housing. Hometown Heroes, of course, we've talked about it on this show. It doesn't hurt to remind people out there. People traditionally think police, fire, it's also open to medical workers, education. So police, fire, teachers, administrative people at schools, medical workers, but not just doctors and nurses, right? There's a whole list of occupations that are eligible, and you may be eligible.
It's like 70 something professions or something like that.
Yeah, they say like 50 plus, but there's a lot of, like, Johnny, I've talked about some of the oddball ones. What about the chiropractor? Yes. Right. Yes. What about the chiropractor's assistant? Yes. Dental hygienist? Yes. Like, these are things that traditionally you're not thinking you're front line, but you may qualify.
What happens if you're doing like hospital administrative paperwork at home and stuff?
So medical billing, no.
Okay.
How about a pharmacist?
Yes.
How about how about a medical cannabis bud tender?
No. No.
It's
not that I know of. But we could start a lobby for that. Yeah, I like that. So the Hometown Heroes is one of them. It's a really, really great program. There are other kind of down payment assistance. Johnny took advantage of it back in the day. Just, like a $10,000 towards your down payment and closing costs. And there's one that's really nice. The bond program, specifically as it relates to FHA, their rate, Johnny, on that loan is still 6%.
Yes, that's our little secret. I didn't want you to say that on the air.
Oh, I'm sorry. Oh, that's
you can, hey, if you want to find out how to get a 6% interest rate in a 7% market, give us a call. Yeah. Thanks, Mike.
Or you could do like the builders are doing. How do you get a 5% interest rate in a 7%?
Oh, I don't even know how to do that. You got to teach me that. I don't know how to do that.
Not
It's
on the
the
radio.
old, it's
He's
the
not.
old 2-1 buy down. It's
Oh,
the
I
old
see.
2-1 buy down.
I
But
see.
but ultimately what it comes down to is you are in a market, and the beginnings and entering a market where that you can get help from the sellers, whether it's the builder
Hmm.
or the sellers of their home. We're entering that world where seller concessions are back on the table as a legitimate play, and you can decide where best to use those funds. Are you buying down your rate, right? Are you doing this 2-1 buy down thing? Are you using it to cover uh, cash requirements? So we're entering that market, and so that's I like how you led this off as the bright spot, and I think it
Yeah,
is the
so
bright
there
spot.
are bright spots. It's because things are changing, right? So it isn't just changing one way; it's changing dynamically. And then the other thing I want to mention, then we're going to take a quick break, and then after that, we're going to get back to the free um, opportunity to get a book from us from Gary Keller, from Keller Williams, the Gary Keller,
Oh,
about
speaking of
buying a
bright spots,
first-time home. And boy, that book is pretty cool. It's not real meaty, but it's pretty cool and has a lot of really good information, including like the psychology of buying a home when you're a first-time home buyer, negotiating contracts. There's a lot of really good stuff in there, really good tips. But
losing is a disease.
before we get into that, I wanted to mention the app again because I'm so in love with Mike's app for buyers. It's such an awesome opportunity. I'm showing everybody at the casino night the app that Mike has. And if you're a buyer with these changing interest rates that are changing so fast and they're going mostly up, I was going to say up and down, but they're mostly going up. And in order to know if you're going to qualify for the home you want to buy, it can change, not even day by day, but morning to night. Okay. By
Yes,
morning to night, it could change that much. And it can
yes.
push you out of the house that you're thinking you're going to be able to buy. So with Mike's app, what you can do is we plug in all the information for your budget and your criteria that works specifically for you. And then anytime you're looking at a property, you can plug in the information for that specific property into your phone or your tablet or your computer. And you hit a button and it tells you whether you're going to meet the mortgage payment and do you have enough money to pay for the down payment and closing costs and the prepaids based on your budget. And if either one of those numbers are wrong, you get a red light. And then it tells you why that you can't afford it. And if it's good, it gives you a green light. And if you get a green light and we need to go out and go offer a deal on the weekend, we don't have to call Mike anymore. We hit the button, print the page. It gives us an automatic approval letter. But it isn't BS approval letter that you get on those Scud missile companies that you could hit a couple buttons on your computer and they say you got loan approval. That isn't what Mike has. Mike has, I've gone through all the numbers. I plugged it into your app. And that based on your numbers, you could
It
either
works.
afford this house or not afford this house. Am I
Yeah.
describing that correctly, Mike?
Yeah, I like to make a distinction between afford and qualify. So I'll just say you
Okay.
qualify for this house. The afford word for me is like
Sorry
a
about that.
point where I'd say, listen, like you as the consumer decide whether you can afford it. I tell you whether you can qualify for it. But yeah,
I'll tell you personally, the afford and qualify are very different numbers.
yeah. And I try to encourage them to think about, can they afford it, right? Like other than can you qualify for it?
Well, what I love about this app, let's say that
But it helps you understand the numbers to know if you can afford it too, right? Like
Mhm.
I think maybe you're going to say this, Jim, like, hey, what happens if we offer this amount, a little bit below ask, or this amount above ask? Can we still afford it, right? Can we still qualify, but also can we still afford it? You got to know that number when you're
Yeah, and
considering
let's
making
say
an offer.
that your number is I don't want to pay more than $2,500 a month for this particular house, right? No matter
Yes,
what, I know I could afford more, but I'm not paying more than 2,500. You plug in that number, it tells you what your offer is, right? It'll you can backtrack it by punching
yes,
in numbers and figure out what the number would be in order for a $2,500 a month payment.
yeah.
You turn it in, you tell the seller, hey, this is what I'm willing to pay the house. If you don't, no problem. Move on to the next one. No big deal.
Yeah, it could be like, Johnny, the only way you can get this house for the payment that you want is to have negative HOA fees. So if you can arrange a negative HOA where they're paying you to live there,
Right.
let's make that happen, right?
Yeah.
The other thing, Jim, that's really, this is a shout out to or message to real estate agents out there. I was surprised last night in talking to some of the agents who I hadn't met. that they were like, I think I recognize you, Mike. Like, have
That's
we
funny.
met? I'm like, I don't think so, but what about the radio show? And then it's always like, oh yeah, we listen. So there's actually people out there listening to us, Johnny, believe it or not. Some of them are professionals. If you've ever been burned by the generic pre-approval letter, which who hasn't, right? If you've been
Mhm.
operating that way, this gives you something that is real time, that you can make sure it's working even before you go look at a house,
Mhm.
right? How valuable is you and the borrower's time when you're trying to see, like, is this a house that we can even, should we even go look at it, right? Should we potentially fall in love? And you can spit out a pre-approval um, that is current, right? It's got today's date. It matches the offer you're making. All these things that we've always talked about being like putting your best foot forward when making an offer. If you need seller concessions, you'll know exactly how much you need to ask for because the closing costs are going to be right there. Like, hey, this one's going to be $28,000, but we only have 23,000. All right, let's make an offer and get $5,000 concession. Let's just ask for it, right? You know what you need.
Or
So,
this, I really only want to pay $2,500 a month. I've been looking for a little bit. I haven't been able to find what I want. They find a house. It's like, wow, I really like this house. They plug in the number, and instead of 2,500, it's 2,625. I'm just making up, right? So then they decide, hey, for $125 a month, I guess I won't go to Starbucks anymore.
that's right.
Right.
For
And I'll
this,
buy the house that I want, and then they can make decisions instead of just kind of looking at a price and not knowing the real numbers. Right. So
yes.
this is an awesome app. If you're looking for something like this, you gotta give us a call. It's so easy to set you up on it, and we'd love to help you out.
FloridaTalkRealEstate.com or call 888-973-7828. That's the hotline. You'll find it at FloridaTalkRealEstate.com, your one-stop real estate shop. Access to the entire team, including Mike Rauch, the mortgage guy from the mortgage firm. FloridaTalkRealEstate.com. We doing a reset?
What do you guys say?
I say let's just push through.
Okay, that's what
Wow.
I'm thinking.
Unless you
'cause
gotta,
yeah, because it's going to be 20 minutes. If we take the break, it'll only be 20 minutes left.
yeah. If you
We
gotta take a little stop, Mike.
No, I'm okay. Everybody
Oh
okay?
no, I'm good.
We're powering
good.
it through then. Okay, let's talk
I
about
still have a strong bladder yet. I'm not that
So
old.
yeah, there you go. Let's talk about the market now. Okay, so there's two interesting figures that I found out from this month's report compared to months earlier. Okay, so the first thing is, even though that everybody's saying our market's been super strong, right, and that we've been very resilient and we're going to tough it out better than the rest of the country, this is what I've been saying. Okay, is that as far as median sale prices, and we're just using Palm Beach County right now as the example, but almost every county is exactly the same on these figures and almost statistically percentage-wise the same, with the exception of St. Lucie County, which we'll talk about separately. But the high sale, when we started the year, the median home value for sales was 526, and we kept going up, right? 535, 541, 600. 615, that's May. June, 620. And then after that, we went from 620 to 600. Then we went to 565. And that's where we were left off in August at 565. And what I said from a peak of 620, and I said, you know what? In my book, that's a 10% price drop not year over year, but the trend for the year, right? Dan was on the phone. Dan DeMott, our broker from Keller Williams Innovations down here, who's a second generation realtor. It's been around forever. It's in his blood, real estate market. He's like the national economist saying, yeah, what we're going to see is a slowdown in price increases, but these interest rates won't be high enough in order to dent appreciation, and will still appreciate through the year. Now, I was saying that I don't believe that. I think that the stress indicators of watching the amount of people backing out of home applications, people canceling contracts, price reductions. We had the signs guy on. Remember the sign installer talking about it. We had Jarrett Perry from Parrott CPA Group talk about all the small business owners and how they're feeling about the economy. We had the photography sign company coming on the show talking about how they're seeing if the market's strong or not. And all those indicators were kind of leaning in my direction, but I'm always try to report stuff. And this month we had a little bump in the median sales price. We went from 565 to 580. That's not really dramatically increased, but it is an increase. And you know what? All the other counties increased too. We saw a price increase in every single county for median sales price compared from August to September. So that price drops that we've seen for the median sales price, they might have flattened out, or this just might be a breather for something to come later. We don't know. So I even said in August that 2 months in a row does not a trend make. And this broke any potential of a trend right now until we see what happens over the next couple months. So prices seem to be holding. Okay. Even though that I thought we would see cracks in it right now, it is showing very resilient. The other
We'll
thing
see what the Fed has to say about that.
Yeah, the Fed is just keep taking that hammer and just keeps, it goes, you guys want to keep going? I'll give you another 0.75 and smack it with the sledgehammer, right? And let's see.
One thing I've always not really liked about our, the median housing is so like if you just have a hot market and like a certain price point, it's going to skew that number, right? It just inherently is going to, whether it's a high-end market or a low-end market. If it's one hotter than the other for whatever reason, you're going to skew that number, and it affects us all in a certain way. So I've always I don't know. I just don't like the specifics of the number. And I understand we're just simply saying
median,
half sold for more, half sold for less. I get that.
Right.
But the mentality of what a house is worth seems to be affected by that.
Well, the median, the average sales price would make it more, it makes it
normalized.
Like when you have the super big home, you have the $100 million home that sold that year, right? I mean, that month. That really changes the averages for the average sale more than it does the median, because the median's kind of weighted half above, half below, but the average, you mush it all together and you divide. So just to give you an idea, the average sales price for Palm Beach County this year, $860,000. Okay, that's the average. And if you go through the year, remember we said we started at 524 in January. The average sales price in Palm Beach County for a single family home was 826. And it got as high as 1182 in June, just like the median sales price. And then it started dropping. But the average sales price did drop for 1, 2, 3 months in a row now. The average sales price.
Take Jim. Jim, you may have been the reason that September was higher than August. You had the one loan that was supposed to close in August and it slipped into September.
Yeah, there you go. Right. Yep. Right? There you go.
That was a big one. And so you skewed it.
I skewed the whole thing. So here's the other really big number to watch. Okay. So the first thing is we're seeing that the median sales price is kind of holding right now. It isn't at the peak where it was in June, but instead of losing about 8% to 10%, we're only like 4% down from the year right now. Okay, 4% down for the high of the year. Now, the other thing is,
what was the September number 2019?
September
you have
number?
Access to that median sales price, Palm Beach County, September 2019.
Median sales price. Yeah, hold on here 1 second. Sorry, I'm trying to find the chart here.
Does it have a 4 in front of it, Johnny?
Like 490.
Yeah, I can't pull it up that fast to where I'm at right now. It'll take too long for me to pull it up. Wait. Let me see. Hold on. Yeah. No, that's median time to contract, median time to sale.
Because you're going prior to the heat.
Yeah, I'm going too far back, Mike. I can't. Yeah, I can't grab that. But I would say that we were in the 450 under 500. Like so 450 to under 500.
20% appreciation from them.
Hey, that's why I'm saying I think that when we go through this correction, unless it's too bad, all we're going to lose is 2021.
But
right, that's all we're going to lose. That's what I'm
wrap
thinking.
your head around that, though. So it's so artificial. The only reason those numbers exist is because of the artificially low interest rates. It frustrates me so much where we dictate the value of your home based on the willingness of somebody to pay you for it. There's there's material involved in the home. Like there should be other aspects to the value of your home, not just what somebody's willing to pay for it. I just that part of
I
the
guess you
housing
could.
market is
We need to get Ross involved. What's the median replacement cost estimator? Right. Let's
Yeah.
look at that
that's what
number.
your
'Cause-
house is worth. I know that idea of it's worth what somebody's willing to pay for it, but there's an actual worth to your home, right? Like a value to rebuild it.
Yeah, but that doesn't include the land.
No, I get it's very true. Very
Yeah,
true.
that's true. And so the other really big figure, other than prices kind of holding tight, is the closed sales. We're down 20% in every county, and it's pretty significant. We only closed in Palm Beach County 1,170 sales. When we were at our peak, which I want to say is not during COVID. I might be wrong about that, but right before COVID, we were doing at some point, I remember talking about 2,000 homes sold a month in Palm Beach County. Now, it wasn't all the time, but 1,800, 1,600, 1,800 was very common. Okay. Now we're down to 1,200, 1,170, right? That's pretty significant drop, 20%. However, nationally, the average is 30%.
Well, but
So we're doing actually better than the rest of the country.
What's the decline in listings, though?
Oh, okay. So I got that. Hold on. I got that number. And just remember, guys, most of these numbers are the same for every county. So if there's any kind of difference, I'll let you know. New listings, we're down. Wow, can you imagine? We're down 10%, 9.5% compared to last year, this time last year. Okay. Pending sales are down 30%. Median time to contract our day, median time to sale is 67 days now. Now, here's the other thing that's very interesting for sellers. This is something sellers need to know. For several months now, maybe almost more than a year, we are at 99% on average of list price to sold price. We're now at 95% list price to sold price.
Mm-hmm.
That's where we've been. That's kind of common, was 95% before all this craziness, right? So we're seeing all these things settle down. I just don't know as far as the prices. I'm still betting that we're going to see price drops, Mike. I'm still seeing that in my mind. I just don't think that we're going to it's going to be really fully reflected until next year, because we did have a lot of price increase from the beginning of the year, from 520 to 620. And then we've started going down a little bit. So that going up to 620 in June is going to push our average for appreciation this year better. But I think next year we might see appreciation, but I wouldn't bet on it.
Yeah, I mean, I think is to me when we had the sign guy on in particular, we were talking about how many signs he's putting in versus how many he's pulling out, and that got us thinking about, okay, well, listings compared to closed sales, and so what's that ratio of new listings compared to houses coming on the market, the houses coming off. And I think that's an indicator, obviously, of what's going on with the inventory. And as the inventory increases, that's going to put pressure on prices and pressure on days on market and all of these things. So inventory increases to me equals flattening or downward trends on housing prices. Simple as that.
But we're not really seeing inventory increase right now. That's the other thing. We're seeing, we've been flat. We were at 1.4 months of inventory. So what that means, guys, is, so we're not getting too wonky, there's an economic indicator in the real estate market of, if no other houses come on the market, how long would it take based on current sales ratio to gobble up all the homes? That's called months of inventory. A normal market is 6 months. I mean, that doesn't give a buyer an edge or a seller an edge. 6 months to sell the house, right? On average. We got down as low as 0.9 months at one point. I mean, crazy town, right? 600 or 500 times less than it, 500% lower than it should be, or whatever that number is. Now we're up to 2.8. Now, the interesting part about, or 2.9, the interesting part about that, we were at 1.4 in July. And then in in June, we were 1.4 months into inventory. And July, we went to 2.8. We doubled. And then after that, we haven't increased.
Now
It's
it
just
stayed.
staying there. I didn't expect that. I expected it to go up. So I think the reason why it isn't up, there's a lot of sellers out there that are like, I don't want to let go of my
Yeah, I
under
can't sell.
5% mortgage and get into a 7.75% mortgage, right? There's
What was
people-
your thinking why we wouldn't see that, Jim?
why we wouldn't see, Johnny? I'm sorry.
So you were not expecting the that outcome. So I knowing that interest rates are going up and so many potential sellers are like, man, I'm not giving up my 4% interest rate or my 5%.
Well,
interest
what
rate.
I would have expected is that there would have been a decent amount of sellers that wanted to sell at a peak and get the money at the peak, because if they're waiting, they're not going to get what they could get right now for the house. Every month that they wait, they're probably not. Now, that's my opinion, but the numbers, if other people could say, hey, Jim, where are you seeing that in the median sales price? It's not there.
Well, so then the sellers, they must have missed the peak, right? Like they feel like they've missed the peak. Now, does that mean they can't still get great dollars for their house right now? Can you sell for profit? But if you got to go someplace, Johnny. And so, so, okay, Jim. So if we stay at 3 months of inventory, that's not terrible for our market. Like that's pretty somewhat healthy for the Florida market. And so if it stays flat, then housing prices aren't gonna drop, right? If the inventory stays at a flat level, 3 months, whether it's 2 months, 3 months, if it stays flat, then you can expect housing prices to hold.
See, I don't agree with that, because what I don't agree with is that the prices we're at based on the interest rates, that there's enough people that's going to keep the demand of that inventory okay. I don't think we're seeing buyers flee and deciding not to buy right now, even though I don't think that for many of them it might not be the right decision, but that's what they're doing because a lot of people base things on emotion without even knowing the numbers, right? I was talking to a young agent yesterday. He actually said to me, he's a brand new agent named Ian, and he was saying, yeah, I'm getting into the market at the worst time because all of his friends are telling him how sucky the market is. And I said, let me tell you something, Ian. I started in that market too, back in 2011, 2012. And it was horrible. And everybody was leaving. And everybody said they couldn't do it. But I did. And the reason why is I work for a living. I actually worked it like a business. Most people don't do that. And if you do that, you don't have to worry about it. The other thing is, you don't care if there's 1,000 or 3,000 homes being sold. If you need your 4 homes being sold every month, you only need 4 out of that 1,000 or 2,000 homes that are being sold. So go get your 4, or your 10 or whatever, and go out and do it.
Yes, or your one home. I mean, an agent can make a good living off of 12 deals in a year, either side.
Yeah.
Okay, so I'm not sure what I hear you predicting, Jim.
Well, I'm not actually predicting, because what I'm telling you how I feel, but I'm not predicting right now because the numbers aren't backing me up. Right. Some of the numbers are backing me up. What I'm wondering is, how when you're seeing the market go up, you see it you can see a chart rising, and then let's say it's going down. Okay. Because everybody agrees this is flattening out. We're flattening. But what I'm wondering is, when does flattening turn into a pivot point where it's actually on the decline? And everybody's predicting we won't hit that decline, but that's what I'm not predicting. I'm predicting the decline will come.
It's very complicated because we're looking at a bunch of different indicators. So when you talk about the market going up, you're saying, well, with days on market and inventory and prices and all this stuff, we just need one chart that says the market across the top and just with one arrow. Does it up or down? Like the market is up or down, right?
Yeah.
Mike,
get all this nuance.
I just looked up Clubber Lane's prediction. Pain.
Get paid.
It looked like you wanted to say something, Johnny. I'm sorry. Were you?
No, yeah, no. I wanted to share. I looked up Clubber Lane's prediction. It's pain.
Oh, okay. I didn't know what that's. So
that's the cherry on top. The end of the show. Well, not quite at the end. Okay.
A Rocky 3 reference. Yeah.
Yeah. Jim, who played Clubber Lane?
I don't remember that. Was that Mr. T? Was he Clubber Lane?
All right. Good pull.
Yeah,
good pull.
Mr.
Good
T,
pull.
yeah.
Okay, I wasn't sure if that was Mr. T. Not. I didn't remember his name.
Yeah,
Okay,
they were
so
asking for his prediction for
What's
the
your
fight. He
prediction
said,
for the fight?
"Bang."
Now wait a second.
Thank you,
I
Jimmy.
threw out a movie quote just a little bit ago, and I don't know if anybody got it. But losing is a disease. Nobody knows what that's from.
No.
Losing is a disease.
Is that Glenn Ross?
No,
Is
Is
it
it,
the football? Is it the football
you're
movie
getting warmer.
with
You're
Al
getting warmer.
Pacino?
Any given Sunday?
No,
Yeah, that's what I was saying. Any given Sunday. That's what I thought, Johnny.
The Natural.
Oh, The Natural. I never saw that movie.
You remember what?
I
What?
never saw The Natural.
What?
No.
You remember the
Uh,
psychologist, Johnny?
I don't like baseball.
Yeah, okay.
He would have a
I'm with you.
psychologist in the locker room with the guy. You've never seen The Natural, Jim?
No, I don't like baseball.
Wow.
I did watch Bull Durham though.
What? Okay. All right.
Well, I didn't watch that. Oh, and I
Okay, so
watched
put that on your
the Charlie Sheen baseball one. What was that? The Charlie Sheen one.
That was
geez.
Why
can't I pull the name of that?
I know it's
Hot.
oh yeah.
It's the Cleveland Indians.
Major League.
Major League.
Major
there we go,
League, yeah.
Major League.
So I have to do this. I know we got probably like 3 minutes, but I got to do this. We got to talk about my carpeting is disgusting because I said I was going to do it last week.
And are we
Johnny,
giving away a
don't do
book?
that to me.
Are we giving away a book?
Huh?
Are we giving
Oh,
away a
let's
book?
give away the book and we'll talk about carpeting next week. Okay. It is important.
And we really should highlight the 2 open houses before we say goodbye too.
Yes. Let's do that first. Okay. So Angelica is at 1526 Running Oak Lane in Royal Palm Beach. Please go over there. She'll be there from 11 o'clock to 2 p.m. today. When you get to the front of the gate, because it is a gated community, please read the directions on the sign. There'll be a phone number. She'll get you into the gate. We also have an open house. Karen Robinson is doing an open house for us over at 3261 Southwest Solitaire Palm Drive in Palm City. Sorry about that. It is also a gated community. She's going to be there from 11 to 2. It's also a gated community, and just read the sign right at the box for the gate code, and she'll get you into there. Both houses are really, really nice. They're very similar to each other. One is a 3-bedroom, 2.5-bath pool home with a lot of upgrades, new roof, new pool resurfacing, newer AC. The other one in Royal Palm is a 5-bedroom, 2.5-bath home. It's a very unusual to have a 5-bedroom home in Pinehurst and Madison Green. Go check them out. We'd love you to go check out those houses. All you got to do is go to Florida Talk Real Estate Facebook page to find the information.
Perfect. And is that how we're going to do our book giveaway on Florida Talk Real Estate Facebook page?
What I'd like them to do is I'd like them to either go to floridatalkrealestate.com and fill out the form. Okay. Just fill out your information. Now, what I need is I need your first name. I need your name. I need your phone number, address, and email, because I'm going to be sending this thing to you. And you got to let me know if you want an audio book or if you want a hard copy book. It's called Your First Home, and it's from Gary Keller, and it's a complete guide on the process of buying your first home. And what I really like about it, it isn't just the wonky, this is how you buy a home stuff, but he gets into the psychology of the home buying process, which I'm really into all that stuff. So we'd love to give it out. The first 10 people that asked this week, they're getting the book sent to them direct in the mail. We sent out 3 or 4, I think 2 weeks ago or 3 weeks ago. So hit us up. We'd love to send that out to you.
Go to floridatalkrealestate.com, and when you get to the website there, you're going to get a pop-up, right, Jim? And you're going to have that information sheet right there. Fill that in. As he said, name and address, email address. Make sure that pertinent information is in there, because Jim's going to need to be sending this off to you. If you're interested in that book for first-time home buyers from Gary Keller, of course, Keller Williams, yes, that Keller, go to floridatalkrealestate.com and fill out that contact sheet, Jimmy D.
And you don't have to do just the contact sheet, John. I just want to say you could call the 888 24/7. We have a live hotline operator 24/7 that will take all the information we just asked for and just say, hey, I want the first-time home buyer book, and give your name, address, phone number, email, and we'll tell if you want audio or hard copy, and we'll get that out to you.
There you go. You find the hotline at floridatalkrealestate.com. Call it if you'd like, and just share that information. We'll see if we can get that book out to you, maybe audio or hard copy. Saturday, 2 hour of infotainment always seems to zoom right on by. It does for me. Hope it did for you guys. And hopefully the infotainment was delivered. I know there was a lot of information. I was somewhat entertained today, so I think you guys nailed it. Mike Rauch, Jimmy D, thank you guys very much. Mike, of course, the mortgage guy from the mortgage firm. I hope you have a great weekend, my friend.
Yeah, thank you, John. We always try to deliver on the attainment part when we can.
The attainment, baby.
Yeah, the attainment.
We just got our first book request. Thank you, guys.
Excellent. Awesome. Keep them coming. FloridaTalkRealEstate.com. Jimmy D, Florida Home Pros with Keller Williams Innovations. I hope you have a great weekend.
Thank you, Johnny. I hope you do too. Enjoy the weather.
I sure will. Remember, FloridaTalkRealEstate.com for all of your needs, your one-stop real estate shop, including filling out that contact sheet to get that book from Gary Keller. Stick around. The locker room is next. Jimothy, our producer, is going to hang out because, well, he's been a staple on that show for many years. He'll be joined by Greek and Joe. They're going to squeeze out a sports show for you. I'll be listening. You should too. And, of course, hopefully you'll be back with us next Saturday, 2 hours of infotainment, 9 until 11. It's every Saturday, Florida Talk Real Estate, and it's right here on Real Radio.
Rent, it's too damn high.